Zimbabwe takes a decisive step towards Basel III and strengthens its financial system. Zimbabwe is at a decisive moment for its financial system. After years of adjustments and technical monitoring, the country is about to complete implementation of the Basel III capital framework, an international standard that redefines how banks should manage risks and maintain capital to ensure stability, even in times of crisis. But what does this mean in practice? And why is this step so important for the country's economy? Since the IMF's Financial Sector Stability Report in 2019, the Reserve Bank of Zimbabwe has been adjusting its regulations to meet international requirements. In 2025, a hybrid technical assistance mission, comprised of IMF experts, thoroughly reviewed the draft texts prepared by the central bank. These documents incorporate the recommendations of previous missions and address sensitive issues. Standardized methodologies for credit, operational, and market risks. A more rigorous definition of what constitutes capital in the banking sector. Leverage ratio, which limits excess loans relative to equity. Limits on large exposures, avoiding risk concentration. And the so-called capital conservation buffer, which guarantees additional reserves. In addition to the regulatory review, the IMF mission also provided specialized technical training for RBZ banking supervisors. The objective is simple but strategic: to ensure that when the new rules come into effect, there is the technical and operational capacity to monitor and apply each of them efficiently and consistently. This is not just about changing the law on paper, but about preparing institutions to comply with and enforce these standards. According to the IMF's most recent report, published in August 2025, Zimbabwe is on the right track. The country has already met most of the targets outlined in the global Basel III implementation schedule, following the same pace as other jurisdictions also receiving technical support from the fund. Despite this, there are still final adjustments to be made before the process is fully completed. The new regulatory framework is expected to be finalized very soon. And when that happens, the impact will be significant for the credibility and resilience of the local financial sector. Full adoption of Basel III strengthens investor confidence, attracts foreign capital, and ensures that the banking system has adequate reserves to weather economic shocks, such as currency crises or sudden drops in economic activity. For a country seeking stability and sustainable growth, this alignment with international standards is not just a technical requirement. It is a national economic security strategy. Zimbabwe is very close to turning this page and joining the group of countries that fully comply with Basel III requirements. It remains to be seen whether the completion of this process will bring the confidence and stability that the banking sector and the population so desperately desire. What about you? Do you believe that the full implementation of Basel III will be enough to transform Zimbabwe's financial system? Like and share this video to help spread this message to more people. See you in the next video.